What's up, guys? Another day, another week in the markets. Today I wanted to bring to your attention a trade that has caught my eye, and it's basically on EURCHF. And as you can see on the weekly time frame, EURCHF has been selling off for quite some time now, and we're currently sitting at a 5-year low. As you can see, we had this massive spike back in 2015, and it's currently sitting at that level right now, and it's 5 minutes before the London Open. So I'm looking to piggyback off of this momentum to the downside. As you probably know from my previous videos, I love jumping on a massive momentum, whether it be bullish or bearish, and in this case it's a bearish momentum that we're seeing on EURCHF. However, today's a bit of a different one because I'm not really doing too much technical analysis. I'm just using my Fibonacci extension tool, Fibonacci retracement and Fibonacci extension tool. So if we just grab our fib and we measure up this move to the downside, we can see that price, after tanking this low, it made a massive 78% retracement. But you can see that over the amount of data that we have currently on TradingView, since 1993, euro has been going down in value against the Swiss franc, and this here was just a light retracement, and you can see we've put in that nice move back to the low. Now ultimately the target for this move should be all the way down here at our 0.27 extension, but first we would have to break this low, which is why I'm anticipating that the momentum here should give us a nice bearish break of this low to try and attempt to get to the 0.27 extension. However, if that seems a bit too ambitious, what I'm looking to do is to mark up more fib extension levels just to see where price could potentially reach and then retrace. So as you can see, if we take from this high to this low, we've hit the first target of 0.27, and currently it seems to be heading to the 0.618 extension, which is about 70 pips, 75 pips away from where we are currently. So that is actually doable, and that would be more of a conservative target as opposed to the 0.27 extension all the way down there. So if price breaks today, I'll be looking to piggyback, looking for intraday retracement and jumping in with the rest of smart money and taking that trade to the downside. So this one is quite an easy one, just using the Fibonacci tool and determining where price is heading. We already know that we have a bearish momentum. We just need to know, where is price going? Where is the magnet that can pull price to? And right now, this is the closest one that we've got. So even if we drop on the 4 hourly, what we can do is we can take, as you can see guys, by the way, before I put on my fib tool, I've been waiting for a sell-off, but price just hasn't given me any significant retracement to my zones, which is why I've decided today to look for intraday moves, because as you can see, the bearish momentum is really strong. I'm not really getting the entries that I want. So although my directional bias was very correct and very right, I have not been able to capitalize on the downward move for approximately about a month now. So today I'm deciding that I'm just going to jump in. Hopefully I catch a nice move to the downside, but obviously within reason, there would need to be a couple of things that I see on the lower time frame, which I would go over if I do get a trading opportunity here. So if we take our fib tool from this high to this low, we can see that price is bouncing right on that 0.27 extension, which is perfectly aligned with the 5-year low that we established and identified on the weekly time frame. So where is the next target for this? Right here, which is the 0.618, and that's only about a couple of pips, so about 15 pips from the weekly extension that we identified. So guys, that is the trade I'm looking at for today. If I do get a trading opportunity, I'll be sure to give you guys an update. So I'll see you guys in a bit. Okay guys, just a quick update on EURCHF pair. So as the market opened, I had a level around this area where there was value, and as you can see, price started to consolidate. So I took my first entry right around this area, but knowing that this had been going down for a few days, I had the intention of averaging in. So right now I took my second entry right above this initial entry, and as price pulls back, I'll basically be getting out of this initial first position, just so then I'll be risk free on this trade. So we'll see how this plays out, and I'll be back with another update. Right guys, as you can see, we've just pushed below the 5-year low, which I pointed out earlier. My entry is all the way up here, which was the second entry. My first entry was around this level, so I've taken that out with a tiny bit, just a little bit of loss, commissions, broker commissions. So right now I'm just holding to see how far down this trade can go. I still believe that the bears will attempt to push price below this 5-year low, and I'm looking to see where that selling could get exhausted. So what I'm looking to do is to basically just take my fib tool and put it on the start of the day and take it all the way to the low, and you can see that we've got this 0.27 first target right around this low. But prior to that, we've got today's low as well, which is around this level. So what I'll do is I'll probably scale out my first couple of positions around today's low. So I'll probably take out about 70% of my trading size from this level and see how price reacts when it gets to the 0.27, because it could potentially bounce off of this level. However, we still have the 0.618 as well all the way down here, which I would love for price to go to. But the same way I averaged in is the same way I like to average out into my trade. You know, try not to be too greedy, and nobody ever went broke taking profits. So that's basically what I'm looking at. Right now my entry is quite safe up there, so we'll see how the market plays out. There's still a bit of a tug of war going on between the buyers and the sellers, so I'll just have to keep a close eye on this one, and I'll be back with an update. So guys, as you can see, we've finally broken below the 5-year low as predicted. Now the stops for my entries are basically at break even. I'm just waiting for price to reach this 0.27 Fibonacci extension, and we'll take the trade from there. I believe the bears should keep pushing for a couple more minutes, which is why I'm patient about waiting to take off some of the trade size around the 0.27, but we could get some bullish pushback, so we'll see how it goes, and I'll be back. So guys, that is the 0.27 Fibonacci extension tool hit. As you can see, we had a bit of friction around this level, which I suspected we will. And as you can see, price bounced off of today's low and proceeded to retest the 5-year low. Usually I would get into another position, but I just thought, you know, this is demonstration purposes, I'll keep it light. And we finally hit the 0.27 fib extension. Now I'm expecting price to then, if it carries on down, I'm expecting it to hit the 0.618, which is right around this level right here, and at that point I'll be taking out majority of the profits. So from the second entry I'll basically take that one off completely, and from the first entry I'll basically just remove half of the position size and let the rest run. But this is basically, guys, literally how to build a small account size using the momentum on the higher time frame in your favor, you know, because you don't want to be going against the trend. I see so many people all the time trading against the trend, and there's been numerous amount of times. I mean, if I just pull this up on the 4 hourly, you can see how the RSI is severely, bear with me 1 second, guys. You can see how the RSI is already severely oversold on the 4 hourly time frame, and it's basically divergence. But just knowing how momentum works through experience, I've seen it so many times when price just keeps going in the direction of the trend. This is why I always start off on the higher time frame, make sure I'm trading in the direction of the momentum, and that's basically smart money. Smart money is basically those who control the direction of the market. It's not necessarily that it has to be, you know, some private institutions or whatever. It's basically anyone who's pushing the market in the direction of the trend, and that's basically smart money. That's basically this trade. I'll probably post up a picture at the end of this to show if price comes back and stops me out at break even though I've taken out some profits already, and that'll be it for this one. But guys, this is basically how you gradually build a small account. You don't have to over leverage your account. All you have to do is find out where the direction is on the higher time frame, and you could just scale in on your entries and scale out when the market goes in your direction. So guys, till next time, I'll see you on the next video. Bye.
Don't go anywhere. Don't go anywhere.
I'm not.
Don't go anywhere.
I'm not. I'm sitting on my
Don't
back.
go anywhere.